You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. He's speaking to us from Gulf Shores, Alabama. Welcome back to the show, Tim.
Jim, and thanks as always for having me.
Tim, do you see anything that's changed in the markets recently? Any trends you're noticing?
Yeah, we had, in my world, cycles and Dow theory, but primarily looking at the structure through cycles. We have short-term cycles and intermediate degree cycles and slightly longer cycles, and then you have a 4-year cycle, and then within that context, there's super long cycles. We've talked about since basically the inception of the United States, there's been 6 long-term economic cycles. So we have cycles within cycles within cycles type thing. And to make kind of a graphical picture of that is, you can have counter-trend moves. A longer-term cycle can be moving up, and a shorter-term cycle can be moving down, and that's just counter-trend or vice versa. And you have all that movement within, the context of each of those cycles. Well, anyway, that said, we turned up last April out of, I believe that to have been a 4-year cycle low, and lows are measured, or cycles are measured from low to low. And that doesn't mean we're going up for 4 years, by no means. It depends on, the translation of that cycle. Is it right or left? And that has meaning, but I digress. But since, depending on how you look at it, really it started in October, but certainly since January, there's been a tug of war taking place at this top between the bull and the bear. It's like it would get a little short-term signal, but it wouldn't be confirmed, and then you'd get it another signal, but it wouldn't be confirmed, and it's just been back and forth and back and forth and back and forth and indecisive movement. But finally, there was a signal on February 13th, a short-term sell signal on February 13th. It was finally confirmed, and there's a short-term low. In a perfect world, cycles contract, expand. You look at indicators to confirm them, but my window that I'm looking at where that low should occur, in a perfect world, we should probably see that low next week. And in the process of turning down into this low, out of this indecisive action, we've also triggered an intermediate-term sell signal. And that intermediate-term sell signal is an opportunity for something more. I'm not saying it is. I'm not saying it's not. I'm just saying it's an opportunity for something more to develop with those higher degree cycles, because we have that clustering that is possibly trying to roll. Again, I want to be vividly clear. I'm not saying either way, because I have to see one step at a time how this develops as we turn into, or I should say out of this intermediate term top and into the next intermediate term low. And there's some boxes that need to be checked for the longer term stuff. But yes, the short answer after saying all that is yes, we have a little foothold here where something could happen. Now, what's interesting is it always works this way. There's always something that, for lack of better words, seems to be a cover story for the turn. Back in 2020, it was COVID. And here it looks like, well, you go back to 2007, and it was the subprime mortgages and peak oil. And now here it's this thing that's popped off the news with the events in the Middle East. So I don't know if that answered your question, but yeah, we have something working here, and I don't know yet how it's going to develop. That's something I'm following in the letter and the short-term updates that I do, but there is a toehold here, and we just got to see how it develops. I don't know at this point. But at least we have something in the works for a turn.
Now, we've always talked about black swan events could be the thing that tipped this very toppy market over. Is Gulf War III going to be it?
Very well could be. It very well could be, or another surprise with it. Anything could happen. Anytime you're in that environment, there's always seems to be a cover story, and that may be strong words. I didn't know how else to word that, and call it a cover story or call it a black swan event or call it whatever you want to call it. But yes, I think that's what we are. I think that's what we are potentially seeing here is that event, and it could listen, as manipulated. I'm going to call it what it is. As manipulated as this market has been, and we saw this with the tariffs back in 2018 and 19. The tariffs are on, the tariffs are off, the tariffs are on, the tariffs are off. Oh, we met with Z, we talked with Z, everything's fine. Well, we got a deal. No, we don't have a deal. And that went on, people don't remember, but that went on for a year. And then, this last year we saw some of the same thing coming out of the April low about the tariffs. The decline in that low was fueled by the tariffs. And then, we got a deal. Oh, we're going to extend it 90 days. Oh, we're going to do. And so what I'm saying is we have the structural setup for a turn, but at the same time, they can come out with the news and manipulate this thing to death, however they want. It could escalate, and that's your black swan event. And they could come out tomorrow and say, "Oh, hell, we got a peace deal," So I don't know how the news is going to, or the so-called news is going to play into this, but it certainly looks like that it's happening at a peculiar juncture where this market is trying to set up for a turn. Let's leave it at that. And so we could see an escalation with another, as you said, black swan event where something else happened to escalate this. Who knows? It's a very dangerous, I think, setup to have the clustering of cycles, first of all, to have a market as extended and manipulated as it has been, pulling us up into or fueling us up into this, this long-term economic cycle that we've talked about for years. And now we're seeing it trying to set up for a turn, and then we have this new stuff going on. Yeah, it's like a minefield, and it's a precarious situation that we're in, let's say.
Now, when we're in a situation like that, is there any particular market play that you like to do?
I'm not giving specific market advice. I'm just saying we're at a critical spot here, and the risks are high. And the risks are high, and I kind of got sidetracked a while ago because of that clustering of higher degree cycles. That's where the risk comes from. Because, like I said, we know we have a short and intermediate term top, but we also know that's an opportunity for these higher degree cycles. And given the overall setup, that's an opportunity in turn for the downturn out of this long-term economic cycle. So that, from a technical perspective, is what puts us at such a critical juncture. And then you throw on top of that this unknown of what's going on here. Yes, we could see a black swan event and this thing could escalate. Absolutely. That's the danger. So you have not only the news now, but you have a technical setup trying to take hold, if that makes sense.
Now, I've noticed today as we talk on Thursday that most items on the stock market boards are in the negative, but, of course, crude prices are climbing higher, but oil stocks are going down. Does that make sense?
I think so. Maybe. Look, I'm a little uncomfortable with what's going on when it comes to oil prices with this news because of the volatility that it creates. But if I separate myself from that noise, let's call it, and just look at the charts and what the charts are telling me, there is a long-term in equities, there's a 4-year cycle. And in commodities, there's the dominant long-term cycle is a 3-year cycle. And there's a 3-year cycle that bottomed back in 23. And, of course, with that cycle, I think it averages around 39 months. So we have another low due this year, or perhaps maybe it could stretch into early next. But we have a low due sometime sometime later this year into early 26 in the commodity complex. So with that said, I think that this is an ending push type thing. And I think that 3-year low is ahead in commodities. So I think this is a reaction to the news, if you will, of what's going on, and an ending push in that regard, I think. And then if and when oil prices do turn back down to move into that cycle, as it appears that they should, then that will also be part of the setup for the downturn out of this longer-term economic cycle. It'll be part of the deflationary setup. So I think this is just knee-jerk reaction to the news events right now.
How long before the bots decide that this is a you got to sell and run phase?
Jim, I have no idea. This market has been saved so many times. People have been totally conditioned, kind of like the old Pavlov's dog thing that, it's always going to be saved by the dip, by the dip, by the dip. So I don't know how long it will take, but the danger of it is that once the stampede starts, and that's how crashes happen, once the stampede starts and people realize, oh, crap, this isn't exactly the same thing by the dip, that something else is going on, it's too late, and then the panic sets in. But, what that tipping point is, I don't know. I have no idea. But I think that's out there. I don't think we're there now. I think that comes later as these cycles set up. I have a good idea when, but we're not there at this juncture for the panic. That's ahead.
Mm-hmm. We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, copper down a bit, not as much as other items. Do you think the long-term future for copper is a bit different because of the high demand for it with all these AI data centers being built?
Who knows? I try to ignore all that kind of stuff and just look at the charts. And, what I see with copper is pretty much the same as with gold. It's pushed into a major top. There's the dominant long-term cycle there is a 9-year cycle. And there's evidence with copper and gold that we've seen. I mentioned that there's cycles within cycles of various degrees. I think that there's an annual degree cycle top, probably, I can't confirm it, but probably in place on gold, and that would apply to copper as well. I need to see how the structure surrounding that materializes, if you will. But I think that we're seeing the topping process in the metals as well. I do believe that. It doesn't mean that there could be one more push with gold. I'm not ruling that out just yet, but I do think that we're in the process, and part of that has to do with this back to this 6 long-term economic cycle thing, and commodities that we talked about. Is if that deflationary setup bites, and again, I know that's out there. It's undeniable because every one of the downturns out of every one of these cycles in history, that's been the case. But it's a matter of when it bites. Well, I think we're again in the ballpark where we're trying, and if this thing does set up, then it's going to take. I know the gold bugs don't like this. I'm sorry. But it's going to take the metals with it. Now, that said, I've done some analysis that I've covered in my letter. I don't think the metals are going to be hit as hard as equities and other asset classes, but I don't think that they're immune to that downturn. So that's something that I'm watching very closely. I got to monitor the structure of gold, which again we're doing in the research letters and short-term updates. But right now I think we're potentially in a topping process with at least an intermediate and annual degree cycle top.
What kind of condition is the real U.S. economy in? Not the stock market, but the economy itself.
Jim, a month or two ago, I don't remember when I did it. It's been a while, so I can't tell you all the way, and it's fuzzy memory at this point. The data's just not fresh on my mind. But I looked back at the unemployment data and unemployment, and what I found. I went back to, I think the data went back to the 1940s. And what I found is looking at some rates of change stuff, and it's in detail. I think it was in January or November letter. I can't remember. And what I found is that every time that unemployment rate of change had risen to a certain level, it had been associated 100% of the time with a recession that the powers that be called, according to them, it had coincided with a recession. Well, that box has been checked. And the other thing that I found is that it had coincided in some shape, form, or fashion with a 4-year cycle top, and in equities. And so again, when I look at, if I split the answer here, you asked about the economy, looking at what I found with that study, which is, it's not a matter of opinion, it's a fact. There it is, black and white, on a chart, boom. So it's not debatable. It has coincided with a recession. Now, they haven't called this an official recession because everything is a lie these days. There's about, when it comes to, it doesn't matter if it's economic news or political news or whatever, it's all bullshit. So they're not going to come out. They'll come out in the future and look back and say, oh, well, we were in recession since so-and-so. But looking at that data as of like I said, a month or so ago, we're already there. And so I think the answer, part A to your question, is I think we're already in that recession. I live in one of the hottest growing areas, at least on the Gulf Coast or Southeast, and we're seeing it here, the slowdown. And then, so that's hard evidence. And then the other thing, like I said, if you drag the market into the equation, when I did the study and looked at it and tying the market to it, that's always coincided with a 4-year top. But again, here we are. We're just now seeing a potential setup trying. I use the word trying, emphasizing trying to take hold here. I don't know if this can be saved again. Like I said, we're in that news-driven environment where they can come out and say, "Oh, we got a deal," and then as a result, it's the can's kicked down the road again, as they say. But we're trying to set up for that 4-year top in association with that unemployment data, and you combine that with a clustering of longer-term cycles. Again, it all ties together of how or what is such a critical juncture we sit. So, I think the economy is not what we're told.
How can you protect yourself from the economic waves that are about to hit?
Well, I think the only way, and people, I'm not giving anybody financial advice, not in the least. And another thing that makes this so dangerous is, it can go on a lot longer than we think. Because I'm not ruling out the possibility that like I said, if I don't, it's not excuses. It's facts that this market is so highly manipulated via the news. I mean, all you got to do is think back to the tariffs. Think back in 1819. We saw it. Again, we saw it. It happened. And every time it would try to set up, they would let a little air out of the bag with bad news, and then when it deflated a little bit, they'd come back and we got a deal. And so my point is that if they feel like a little bit too much air gets out of the bag here, they can come out and manipulate this thing just with news alone. So I'm not making excuses about where we are or the risk we face, because that's very real. I just don't know what their response is going to be to it as it bites. And so, I don't want to give, and I'm not giving advice, but if this deflationary setup bites, I think it's going to be across all asset classes. Like I said, I think the metals are going to come down, but I don't think, based on some solid studies, that they're going to be hit as hard as equities. I think real estate's going to be a disaster. I think we face, with this 6 long-term economic cycle, something far worse than the little COVID decline or the 2009 decline. I mean, the risk here is very, very high. And the only place I know to be safe is to be out of the way. Get off the track. Get off the track. The train's coming, you get off the track.
Bonds?
Yes. I think interest rates are going to be going down. I've said that. I've done studies on that. I'm sticking to that as part of the setup. So bonds, I think bonds will be going up as rates go down during this process. Yes, I agree with that. Mm-hmm. Also think, contrary to popular opinion, and again, everything is, I hate the word. I don't want to use the word. But everything's kind of fluid. In other words, the situation could change. It could change. But until it changes, let me say this. I also think that the dollar is going to strengthen. As contrary as that sounds, I think the dollar is going to strengthen throughout this process as well.
Tim, any other thoughts you'd like to weigh in on?
Nope, that's pretty much it. Anyone who wants the research, like I said, once you look at the data, it doesn't sound so crazy. It's available at Cycles, News, and Views.
Well, when bombs are falling, nothing sounds crazy.
Yep, you're right. Cyclesman.com.
My guest has been Tim Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or for any of our guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on X @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.